Hello, my name is Gavin Starks. I'm the founder of Icebreaker One, and today we're going to be walking through some of the challenges around the E in ESG. Next slide, please. Um, just very briefly on Icebreaker One, we're an independent nonprofit working on making data work harder to deliver net zero. Next slide, please. We're positioned here as a nonprofit to help unlock access to data so that decision makers can mandate, measure, and act upon the data flows that enable net zero. So we work in between government, commercial sector, and the financial sector. Next slide, please. Aside from myself today, we have our researcher Cherie Hellier and Emmanuel Cocker, who are going to be taking us through some of their research. But I just want to set the scene first of all. So next slide, please, as to the complexity of this ecosystem. So one is to think about the flow from the real economy into the financial economy here. So here you have resources, could be electricity, could be energy, could be water, transport, and so on, that are used to make things. All of those raw inputs are fed into carbon accounting calculations and systems using models such as the greenhouse gas protocol to assess their carbon intensity. All of those things are bundled up together into reports, and we'll go into some of the acronym soup in a second. Those then get interpreted by ratings agencies and markets and investors, and in some cases audited in order to work out what the link is between the ESG metrics and the financial impact that they have. And that's overseen obviously by policy and regulation at one level, and ultimately we're trying to address the climate science here, which is determined by the IPCC as to how do we get to net zero. Next slide, please. And I'm not going to spend too much on this next piece, but just to give a sense of the ecosystem in which we're operating here, when we look at sustainability reporting and disclosure, and the data management within that, there's a huge kind of lexicon of frameworks, standards, protocols, data management, reporting, talks of integration, looking at data quality, looking at consistency, and just that sort of bottom part of the table there, looking at things like the Task Force on Climate-Related Financial Disclosures, or TCFD, is in the mix here, through to TNFD, which is the Task Force on Nature-Related Financial Disclosures. You've also got things like the Global Reporting Initiative, the Sustainable Accounting Standards Board, Carbon Disclosure Project, and a huge sea of acronyms here that you could quite happily spend many months wading through. We've started a process of mapping out some of this ecosystem on icebreaker1.org/ecosystem if you want to have a look. But the principle here is really that this is very complex for organizations to deal with. And what we hear in our work, which spans organizations like the Future of Sustainable Data Alliance, which includes organizations like Moody's, S&P, London Stock Exchange on the rating side, right the way through to the energy sector, where we're working with SSEN, through to the banking sector, working with the Perseus program and Bankers for Net Zero. There are massive challenges here around access to data, quality, trust, and so on. But without further ado, I'd like to introduce Cherie to take us through some of those primary challenges around the E of ESG, the environmental component here. Cherie.
Thank you very much, Gavin. As Gavin said, I'm a researcher working with Icebreaker One. So we are focusing our research, as Gavin said, on the environmental part of ESG data. We're currently working on a 10-month program to begin to develop and improve the data infrastructure and practices for the sharing of impact data. So far in our discovery phase, research is showing that organisations are adept at the social and governance aspects of ESG, but in terms of the environmental data, there seems to be a current lack of access to the primary data, lack of quality and transparency of the data, and therefore a lack of trust with the environmental data. Just last week, you may have seen an article. The Financial Conduct Authority warned index providers that they are fueling greenwashing after identifying widespread failings with ESG benchmarks that guide billions in sustainable investment. The overall quality of ESG data disclosures made by index providers was poor. And one of the FCA's observations was that the subjective nature of ESG factors and how ESG data and ratings are incorporated into benchmark methodologies could increase the risk of poor disclosures. As you would have seen on the previous slide, the ecosystem is vast. And stakeholders in public and private sectors are focusing on ESG performance, but significant work remains to be done by all stakeholders across all communities. A recent study by Aviva Investors Real Assets in London, who polled more than 500 institutional investors across the UK, Europe, and North America and Asia Pacific, revealed that 56% of institutions surveyed were unsure or lacking confidence in their ability to meet their long-term net zero and sustainable commitments from real asset investments. And so we're discovering a real net zero nervousness that seems to exist. So, as part of our research, we'd really like to know what your organisation's approach to ESG reporting is, and by asking you a couple of quick questions as part of a live poll during this webinar. So, could we have the first poll, please? Thank you very much. So, as you'll see, that a poll should have appeared on your screen, and we'll give you a few seconds to answer the question. You just need to click on one of the four answer options. And the question is, how would you rate your confidence in the quality of your organization's environmental data in ESG reporting? High, okay, low, or not sure? So we'll give you a few seconds just to complete that. So if most people have done it now, thank you very much for your answers. And I will now hand back to Gavin.
Thank you very much, Cherie. So I think this is something that we hear all the time of the quality of environmental data is, notice this is actually reflected in the poll. A third of our recipients here are not sure. That's quite normal. And we've got 40% at low, and then 20% at okay, and only one person out of the collection here thinks that they've got high confidence in the quality of their environmental data. This is a huge challenge, and I think one of the reflections I'd add to this as an example in our conversations with the banks, because the banks carry a lot of the net zero liability on their loan books, and a lot of the analysis, particularly for things like Scope 3 in the SME community, is done on spend-based analysis, and that has a lot of quality issues around it, as well as transparency around the methodologies being used. So there's a kind of failure in some sense of the comparability of information, because there's a lack of alignment and cohesion around how things are being measured in the first place. With that, I'd like to pass now on to Emmanuel, who's going to talk a little bit about some of the challenges identified with ESG data sets. Emmanuel.
Thank you very much, Gavin. Thank you all for listening in. My name is Emmanuel. Since the commencement of this project, I've had the unique opportunity of diving into the ESG ecosystem with the view of discovering and indexing data sets so as to improve data sharing within the net zero ecosystem. And I've come across one or two challenges I would like to share with you today. The first being that ESG data sets usually come in formats that are not machine readable. We usually find them in PDF documents, maybe as impact reports from organizations or, similar reports. Also, it is actually very difficult to find data sets in logical bundle. So like we all know, the E of ESG has some factors, in terms of the environmental factors. We're looking at things like GHG emission or land use or water use, so it is quite difficult to find these data sets in combined form. Usually you find it in isolation of each other. The third issue is that there's always the question of if the data is of good quality, by users, and then this brings to for the issue of greenwashing, as we all know. The fourth issue is about the licenses. Usually, it's not clear how and who can use it. And lastly is, of course, open ESG data sets are sparsely available within the ecosystem. Most of the data set out there are commercialized, and I'm sure we all know why that is. Permits me to end my presentation by just briefly touching on, this TCFD principle of effective ESG disclosure. TCFD, like Gavin had mentioned, is the task force on climate-related financial disclosures. And they are given 7 principles of effective ESG disclosures, which are that disclosures should represent relevant information. It should be specific and complete. It should be clear, balanced, and understandable. Should be consistent over time. It should be comparable among companies within a sector, industry, or portfolio. It should be reliable, verifiable, and objective. Disclosures, lastly, should be provided on a timely basis. The lessons that we've drawn within this short period of time is that organizations and investors need a paradigm shift in terms of their orientation should focus on impact and not just input and output as we currently find in the ecosystem. The second is that organizations need to define and identify the ESG indices or factors that correlate with their vision, mission, strategy, and of course, the regulatory needs, and then define, the materiality of these factors and then prioritize them. Lastly, organizations need to come up with a systematic method of collecting and verifying data sets, and also turning this into a process whereby they need to, identify ownership and responsibilities within the organization. And then, of course, the bigger picture will be to use technology to automate the process of collecting and verifying these data sets. That is the end of my presentation, and I would like to hand over back to Gavin. Thank you for listening in.
Thank you very much. So again, these things we hear from many different directions, and TCFD, Mark Carney recently was presenting and saying, look, TCFD is not meant to be a data collection exercise, it's meant to be helping to drive behaviors. I'd like to encourage everyone on the call, if you've got questions, please do ask them in the chat and we'll come to them, and ask any question. There are no stupid questions here. As we've said, it's a really complex landscape, and we're very keen to get your insights. I'd like to pull us onto the second poll now, if we could launch that. Great. So our second poll here is, what is driving your environmental reporting? And we're going to restrict this to one answer. Is your primary driver compliance, marketing, or sustainable, aligned with your sustainable mission statements? Is it finance? Is it other? Obviously, we're seeing a huge increase in regulation, both from international standards boards publishing recommendations and frameworks. The EU is moving, the FCA is moving, the SEC is moving, and these are very material to disclosures, or to driving disclosures now from organizations. But one of the conversations we'd love to hear back from people on the call is, how are these linked to what you're doing within your financial prioritization and business prioritization? So we've had a good set of responses here. For the 2 people who said other, if you wanted to add them into what is the other driver here for your environmental reporting, it'd be very valuable to get that. But basically, we have an approximate split here between compliance and sustainable mission statements. And I think that's again broadly what we see in the marketplace. For those who don't fall under regulatory and compliance mandates, then it is very likely to be driven by the sustainable mission within organizations. And obviously, where regulation exists, there is a mandatory driver there. Interestingly, it could be the demographic of this call. We're seeing more on that mission driven activity than on the compliance side. And I appreciate, as Tom's just mentioned there, for many of the organizations here, it's all of the above are drivers, but we wanted to really understand, what's at the top of the list. Come back to a question, a comment as well from Robbie on the data licensing. Is this, we see this and hear this now from organizations at the kind of across the ecosystem, is that there's a sense that we should have open data for lots of disclosures, but that isn't yet we're hearing is quite trusted well enough. So there's also a hesitancy in some cases to release information completely openly for anyone to use, because people are not quite sure if there are other issues that could be derivative from that, whether they're competitive or whether they, in a financial context, might change their risk profile in a negative way. So I'd love to hear there about any experiences from the group here on what sort of restrictions would they want to put around their data in order to only share it with specific audiences. Let me just come to the chat now and see what's going. So we've got a question there coming in, I think, from how are there lessons learned from other countries and jurisdictions that can be applied. One of the things I think we've learned there is there's lots of different taxonomies in development around the world. Last count I heard was about 40 something, with a lot of different approaches to how sustainability reporting and ESG reporting should work. The harmonization of those is obviously now the remit of people like ISSB, try and bring people together. Sherry, have you got other areas you could bring to shine a light on there in terms of what's happening in other jurisdictions?
Sorry, just having some problems with my mute. No, I think that it's like you said, part of the lack of confidence for some organizations is the massive ecosystem, and it's just being quite exact about what exactly they need to report, and then the deadlines and guidelines they use to do this, and then how that data is actually used. I think it's the vastness of it that is leading to that lack of confidence in a lot of organizations. And then when people are looking for accurate data to actually use for impact investing, it's that transparency that's also lacking a little bit. I'm not sure if that exactly answered the question, but that's what our research is showing.
We do see a lot of complexity, I'd say, around even looking at the EU direction of travel. There's still many discussions about what ESG should be and could be. And I think part of our observation here is when we look at the kind of broader landscape, whether it's the kind of labeling or avoiding greenwashing or benchmarking and so on, we haven't yet even arrived at a common way of describing what these things are. So it's and the regulatory instruments are broadly upon us. So we hear a lot about confusion in the marketplace, and when we look at, again, the difference between European commissions, you've got EFRAG. I won't unpack all the acronyms here, but you've got differences between, say, EFRAG have got their draft general sector agnostic approach for the European Commission. And then you've got the ISSB working more at an international level, which is working to finalize its drafts on general and climate related reporting standards. And then we'll look at expanding the international framework to look at additional thematic areas. So what we also see internationally there is, the EFRAG covers things like general standards for ESG, and is yet to really drill into the sectoral standards. And ISSB is looking at all information deemed material, as well as specific climate-related requirements. So as we're trying to help people navigate it ourselves, what this means for data availability and coherence and compatibility have many question marks over it. So I think we're now might have answered that international piece there. We've got two questions coming in from the chat. Please do ask any questions you feel. One question here is, ESG investors seem to be primarily concerned with climate risks to the company. Are we including this or focusing on the impacts of the company on the climate, i.e. the other way around when you speak about ESG data? So this is a great question. I think this is one of the dangers one of the consequences of creating reporting frameworks is it can turn into a measurement exercise that's fairly unidirectional. And we've heard, say, with our work in the insurance sector, they're looking at the impact of the environment on their assets, or speaking with asset managers, but there's less emphasis on the impact of the assets themselves on the climate. I don't see how we really dissociate those two and hit net zero. So I think there's probably a good call there from the audience here to say, well, they should be joined up, but how do we join them up is one of the questions here. So the linkage between financial incentives and ESG reporting and how that loop works. If we just end up with, as we're kind of edging towards at the moment, and you're seeing ESG reporting now used in the ratings agencies, is if it's just another metric that is used in trading, it will lead to a certain set of behaviors, but it doesn't necessarily drive behaviors throughout the ecosystem towards net zero. That's one of the areas that we're looking at with the program I'm running with Bankers for Net Zero, which I'll touch on in a moment as well. Does that answer the question? I think, yeah. So the second question there that's come in is, what do we see as the path to standardization of the data inputs and outputs? Mention even the GHG standards don't really lead to comparable data across companies. Can large global organizations like ISSB get detailed enough? Or is it on a sector by sector basis? Some commercial tool providers or organizations like ours might be developing taxonomies. This is a great question. So one of the big challenges here is we're trying to, when I say we, I mean globally, as society, we're trying to join up the way that our real economy works. So our utilities and transport and farming and so on, and how they can create financial impacts how they create environmental impacts which have financial consequences. And likewise, we're trying to work out how to unlock financial capital to incentivize and deploy low carbon technologies that will deliver a net zero future. And in the middle of that, there's a whole range of standards and frameworks and taxonomies that are trying to say, well, if you measure it like this, then you might have some kind of benchmark and you can move towards a lower carbon future. I think we've got some fairly material concerns around the cohesion of methodologies and approaches. And maybe articulate this through one program we're working on at the moment, which is called Perseus, which we're running with Bankers for Net Zero. The ambition for that program is to enable the banks to get access to real economy data. And we're starting there with electricity information directly from the SMEs, in this case, from their energy retailers. And those energy retailers can then supply the kilowatt hours and ideally the carbon intensity of those kilowatt hours on a month-to-month basis. Now, if we can get that in a machine-readable, automated format through the system there to the banks and the carbon calculators, etc., that are or analytics and commercial tool providers, excuse me, then we'll be able to start getting comparability. But step one of that is to get the banks to agree to deal with electricity in the same way, because they can within these different frameworks come up with different answers. And so there's an alignment piece there around what is the materiality of the reported information and its impact on unlocking financial incentives, whether those financial incentives are better interest rates or tax breaks or whatever. So I think there's the challenge is to try and bring people together around impact and materiality to address that question. Next question we've got here are from Julia. Could there be lessons to apply from the development of digital twins for the built environment and industry, for example, BIM, so building information management, traffic data, flood management? And I think the short answer to that is yes, there's lots of lessons to be learned there. And we were involved in one of the national digital twin programs. Access to data is paramount to all of these different initiatives. And so we really strongly feel that we need to get to the point that rather than people having to disclose information multiple times in multiple different formats, that we turn that model around and say, actually, if you want to create a particular calculation, you can come and access specific information from my organization or about my organization with my permission. And a good example there of where this is going wrong, and if you think about it, like today's the simplest it's going to be, is that we've had one example just recently of a farmer who's had to fill in multiple scope 3 calculators for their customers for the same milk coming from the same cows in the same shed, giving different answers. And that's just not good enough. We can't move forward there at any form of scale, because apart from anything else, the farmers will just give up on that process, because really what's the point at that stage? So linking it back into financial incentives, creating assurability around the data flows is kind of really critical. I'm going to keep going through. We've got quite a few questions now. Question there from Sharon. Surprised that you said there are more issues around environmental disclosures compared to social disclosures. Our focus today is more on the environmental disclosures, and there are many challenges around them. I think there are also vast challenges around the S and the G possibly the least defined in the mix here. But I think there are, even if you just look at some of the baseline S and G components, we haven't really nailed a lot of that. I think the pattern recognition here that we could bring is that the E is being monetized at scale and is being used to drive very large scale investments. So I would hope that as we all collectively work through the challenges of getting assurable data and auditable data through into a regulated environment, that the S and the G can follow suit and look at some of the patterns that have been created in the environmental reporting space and say, well, let's learn from them, and can we move faster and catch up with some of those elements? Because when we look at what some of the research was showing there from Emmanuel, getting verifiable information that's comparable and consistent over time is just not happening right now. So these are quite material issues. Let's see. Another question here from Martin on how do you overcome the barriers of organizations not wanting to report on ESGs because their inputs show them in a poorer light to that of their competitors. Yes, massive challenge there, and we are one of the reasons that we see the importance of the work we're doing here around Open Net Zero, which I've dropped into the chat just earlier, is that access to data is critical here. Now, it's being driven top down from a regulatory point of view. And actually, since we're in Q&A, actually, would you mind just stopping the slides there so we can see each other? From a regulatory point of view, people are going to have to disclose. And what we're hearing is that companies are then immediately going out to the supply chains and say, well, you've got to send us more data. And there are lots of drivers then for companies not want to do that. And we've had lots of experience of companies saying, well, I'm just going to get a bad scorecard. So how can you make it look better? And at the moment, a lot of organizations can just effectively massage the numbers. Cherie, do you want to come in on that as well?
Yeah, I think it also goes back to that, like you said, sharing data, being able to compare data, and everybody collaborating together for the better good to achieve net zero. There comes a point where it's less about competition, but collaborating together to achieve better better planet and working together on the challenges that are faced, and also the barriers that we need to break down as well.
So
Yes,
I think there one of the elements that we're working to here on the program with Open Net Zero is to provide access and discoverability to the data by suggesting to organizations that if you have data, publish metadata, the data describing that information, in a way that it can be searched. And so that can then be discovered via search engines and so on. How the data is then able to be used can be subject to different types of licensing agreement. And so here we're looking at creating an advisory group to help us understand the shape of this and the shape of environmental data. And one of the questions in there is to really understand what the market needs are through user stories. So what are your stories? So I'd encourage everybody on the call to join in to this group and help us understand those user stories, better understand those challenges in accessing ESG data. And Martin, to your point, lots of people don't want to disclose, understanding the types of data that are actually needed. And here we can also make recommendations back into the system, and through the work we're doing on this particular strand at Icebreakers, to feed back into some of the regulatory processes and other parts of the ecosystem to help shape what the market needs are. So I think one element of that, just to shine a light on as well, is if companies don't want to disclose their information to the world, they might want to disclose certain elements to certain actors. And that's where the ability to discover restricted data, but provide conditional access to it based on who the audience is something that we've built into some of the Icebreaker work here, which we call a trust framework, which is linked to the Open Net Zero program. So I think if we can come back to the the ag slide now, just to bring that up. Keep the questions coming if you have them. Great. So there's we'll post this in the chat as well. But Cherie, do you want to talk a little bit about some of the objectives of the advisory group here?
Yes, so as you can see there on screen, that's the link to join it, and then there's more information once you click through. Really, we would like to hear about your needs, the challenges that you face in reporting of ESG, and how together we can build a solution that will involve sharing of data and how we can achieve that together, and really listening to your needs and how you currently use how you currently generate your ESG reports, and how we can collaborate going
Mm,
forwards, and really looking into your user needs essentially.
brilliant. And maybe come back to Emmanuel as well, just to maybe talk through a couple of examples of the kind of information that we're indexing already on Open Net Zero. Emmanuel, do you want to come back in?
Yes, thank you very much, Gavin. So currently, we found some good use cases. For instance, the World Bank ESG dataset is currently on Open Net Zero, and it's available for use. We also have the World Bank water dataset also on Open Net Zero. We equally have a company called Exerica, their ESG dataset is also available. Then a couple of more will be coming in, within the period of this project. So I want to admonish everyone to bookmark Open Net Zero on your systems, because we'll be doing a lot in terms of democratizing access to ESG dataset. Thank you. Back to Gavin.
Thanks, Emmanuel. Well, look, it's been a good conversation today. I think just let me do a last check for any other questions. I'd also love to hear then, just as in closing, what would be most useful to this audience? What would you like to see next as we go forwards on this piece of work? What would be top of mind, front of mind for you as a priority? There are obviously a lot of regulatory requirements that are hitting this year, but we really need to understand, what's the long term of this as well. If anyone has areas there, then please either drop it in the chat, or you can always get in touch afterwards and join the advisory groups. So we'll just share that link. Okay, I think in that case, we will wrap up for today. I want to thank Emmanuel, thank you, Cherie, and thank you all for attending. Please do get in touch with us. We are very keen to hear from you in the development of this work. And there's more information on our site, including the sign up forms. But thank you for joining us today, and hope to see you again soon.